Hello and welcome to another Market Outlook Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and I hope these quick videos help you get better trading ideas and improve your trading. So in today's video, I want to focus on a really basic concept that helps me figure out when I can expect the market to reverse. So this is a very specific, simple approach to when markets are trending. Now, it works in stocks also, but I'm going to focus on the overall market because a lot of traders get too hung up in trying to pick the bottom as a market is selling off or try to anticipate the top as a market is rallying. When the first thing you should be looking at is price. Now, I've got the 10, the 20, the 50, and the 200-day moving average on my charts, like probably a lot of you do, or some variation thereof, and I look at those too. But the most important thing is price. And when markets start accelerating, and acceleration can happen with big bars or gaps, what happens is the prior day's ranges, the high and the low, become even more significant in terms of their support and resistance. So the short answer is, let's take it from the bottom, literally. When the market put in this bottom here, I didn't know it was a bottom. But what I was waiting for, and you can see as the market was accelerating lower, the market didn't come anywhere close to the prior day's high. I want to see two things. I want to see the market trade above the prior day's high, and then as a confirmation, I want to see it close above the market's prior day high. That happened right there. Okay, that happened right here. So I don't ever think I'm going to catch this low. I may not even catch this low. Although in our day trading courses, we'll teach you ways to track this intraday and refine it. But from a bigger picture point of view, when is it safe to get back in and start thinking bullish? And I'm not suggesting you have to try and pick a bottom here, but at least it also gives you a sense of when the market might turn around, and then you can start looking at more bullish trades. But until then, you're not getting caught in this downdraft. So look what happens. We closed above the prior day's high for the first time. Now watch the prior day's lows. And if all you did was focus on not worrying about if the market was going to go down until it took out the prior day's low, that first happened way up here against the highs. And if you waited until the market actually closed lower than a prior day's low, right here. So as this market pulls back, as bullish as you may be, or as bearish as you may be and worrying about when you need to cover, keep an eye on the prior day high. Okay, now as the markets accelerate, you want to give it a little room. Okay, so in here, it did take out the prior day's high by just a few ticks, but if you gave it a little room, and if you watch the other markets, the Dow, the Qs, and the IWMs for confirm, you would have realized that that wasn't a very convincing move over the prior day's high, and certainly didn't close there. And now we've started to accelerate. Yesterday we bounced here, but if you look at the Qs, which I will in a second, it didn't come anywhere close. All right, so keep an eye on that. I know it sounds really simple, but go back and look at markets when they start to trend. So here's the key. They have to start to really trend. So if they're in a choppy mode like here, that's not what we're looking for. If they've consolidated and then break out, that's what we're looking for. So in this case, this one breaks out. This is a little bit of a head fake, but once it closed back here, it starts trending higher and you're in the move, okay? Keeps you on the right side of the market. If you want to try and pick lows of the days, this isn't the right thing to do. But if you don't want to try and pick lows of the days, which I would recommend you don't do unless you're really good at, say, opening range trading, then keep an eye on this indicator. I think you'll find it helpful. Let me know what you think in the comments below. As always, hope this helps, and I'll see you in the next video.